Good morning, Master Traders. Let's take a look at the Dow since it's been making new all-time highs. Was it 8 days in a row? I didn't count them, but thereabouts. So now it's starting to pull back. This is a live bar right now since it's 24 hours futures. And so it's in an uptrend. It made a nice bottom here. Where's it going? Well, what did Warren Buffett say yesterday? It's going to 1 million in the next 100 years? Maybe so. None of us will be here to know, so can't dispute it. Probably will. Anyway, these pullbacks, and this one's a little bit more interesting, but generally, these type of pullbacks, we want to see pullbacks to some area of support, and then we look for confirming patterns in those areas. So, like right here, prices pulled back into that support area, and then after they ran up as they did here, and they get extended, you really don't have reference points of price support, which makes it more difficult because that is where the big money is going to bid. Yes, they can use subjective reference points like the 20 MA here or the 50 MA or the 200 when it gets down there. And you can see how it stopped here, but that was in alignment with some little shelf of price support. So when you see those promoting a moving average as a reference point, whether it's one that I use or some that will use exponentials or ones based on Fibonacci numbers, whatever it might be, just realize that it's not that line that's support. It can become a self-fulfilling prophecy. But if you look to the left, most of the time, there's going to be some price reference point. The more you get away from the subjective type of analysis, meaning indicators, whether it's a moving average, whether it's a Fibonacci retracement level as a reference point where to buy, more clarity there's going to be to your analysis and probably more successful trades. So this bottom right here, why did it stop here? Well, you had the 50 there, which is a widely followed moving average. So it can become that self-fulfilling prophecy. But if you look over to the left, there's nothing. There's no price. Right? So the price area was down here. So what is the master trader rule for that? And it's what I call creating support. And how does that happen? Well, in this case, it formed a swing low, but it's in the middle of nowhere. It is on a 50 MA, which is a widely followed reference point. But once you have that swing low, right, just with your eyes, you can put an imaginary line over to the right, draw it if you like, and when it gets into that area, not an exact point, look for buyers to show up. Okay? When it pushed up into here, which was now resistance, it pulled back and it came into this reference point. When it pushed ahead, it came down into this reference point, and so on, and so on. Bottoming. That's what we call major support, minor support as it trends. And then here was the, again, accelerated run up, pull back to the 20, nothing to the left. It retests the high, comes down to the 50. It's in alignment with price support. Retests, creating support. Now it's done the same thing. So now is it going to pull back to the minor support level? Can it possibly go sideways and create support? Sometimes you get continuation patterns. So you always have to have an ongoing form of analysis to determine, is this the turning point? Because that's what we're looking for. We look first for a existing trend. The trend is up. Where is support? It's down here. It's down here. Now, if you're an intraday trader, of course, you can go down into an intraday time frame. For a longer intraday time frame, I like the 60 MA. So where's support? Well, right here. And that's where the little bounce came from, and now it's up into resistance. So is this established pivot now going to hold, and then we're going back up? That's obviously something to look for if you're watching intraday. If it fails, Right? The 200 is probably not going to do a darn thing. Just a line on a chart, and you can see the moving averages move around as you change time frames. But possibly here, where there's some real price support, would be the area to follow. So, just a lesson for today. You can apply that to any stock, any market, any ETF, any commodity. It's all the same. The analysis is universal. Okay. Have a great weekend, everyone, and we will talk on Monday.